All right. Hello, evening, everyone. Okay, evening. Okay, now, so we are back for portfolio building on Fridays. Now, so this is year two, right? Year two together with all of you who are still joining me on a Friday evening. And a good evening to all of you. Yeah. All right. Thank you for joining me on time. Now, so if you can hear me and everything is working fine, drop a comment, say hi in the comment box, and I know we are ready to get go. Okay. All right. Hi, Irene. First one, I'll put you in the limelight. All right, you're the first one. I'll put you in the limelight. Hi, Florence. All right, hi, Mei Ling. Okay, hi, Jason. All right, okay, awesome. Now, so thank you all of you for joining me once again on Friday. And hi, Adeline. Okay, and we're back. So today, we still have a Facebook user. All right, now, so Facebook user, can you please follow, all right, can you please follow this? All right, streamyard.com/Facebook. All right, and you'll see a Facebook button after that. So can you just click to approve? All right, and after that, we'll be able to see who's leaving comments on the back end of the system. Okay. All right, now, thank you very much. And without further ado, let me get the session started and moving. So it is once again portfolio building on Fridays. And for those of you who are joining me for the first time, okay, first time over here. All right, now what we're going to do is this, okay? Over here in this session, we're going to attend to what we call the real new beginners, all right? So I'm treating the session as though, all right, I'm talking to people who have never done options before, all right, who have never sold options before, all right? And what is your first dip? Okay, what's your first dip into option selling and what's the safest approach you can take? So what I'm doing over here is I'm covering option selling from an investment perspective. Okay, so I'm building an investment portfolio. Okay, so this portfolio that you're seeing on the screen, that the one that I've been building for all the people who have attended the public sessions with me for 1 year now, okay, is an all cash portfolio. All right, it's an all cash portfolio and it's investments, which means, all right, any stocks that I sell options on, all right, I start off with the goal that I'm happy to own the stocks. So if anything happens to the options that I sell, all right, the worst case that I'm in is ownership of the stock. Okay, and I'm fully comfortable with it and I'm fully allocated, right, to have the capital to actually buy up those stocks. So that's how we're going to do it over here. So our approach is instead of buying the stock, okay, we're going to sell put options on the stocks that we're targeting. All right, why selling put options? Number one, okay, because when you buy stocks, you actually need the stock to go up for you to make profits on the stock. Okay, so as long as it doesn't go up, you don't make money, right? And we all know this, right? Playing on some of the safer stocks, all right? They are the boring counters, and boring counters don't move very fast. Okay, so it frustrates people, right? Although they're good stocks. Now, so using the idea of selling put options, all right? Selling put options doesn't need the stock to go up for you to make profits. Why? Okay, because selling options is pretty much like selling time. All right, now you are getting paid for the time, right, before the option expires. All right, so can you see how it works now? All right, so people pay you for the time, okay, for your promise to buy their stocks. Okay, but by the time comes, even if the stock doesn't collapse, it means that they are not going to make their claims. So you don't have to buy their stock, but you already still got paid. Can you see how it works now? So when I sell put options, yes, I potentially lose upside on the stock. Okay, but I get compensated, right, on occurrences where the stock do not go up. Okay, and the best thing is this, because I'm doing it on good stocks, right, and on fundamentally undervalued stocks, and treating this as an investment portfolio, right, the worst case scenario is become an owner of the stock, right? If I own great stocks, okay, I can always sit on it or turn around and sell call options to continue to generate income, all right, until the stock price resumes and rebounds, and I can close the trade out for a profit and then restart my portfolio put selling. Okay, all right, now, so that's just a brief outline over here. All right, and hi, Nelson. All right, welcome to the session. Good to have you back again. Now, so let me turn off the streamyard.com so that you can see the full screen. Okay, and disclaimer, all right, this is a public session. I will be discussing live trade suggestions that I will be putting onto this portfolio. But before you go ahead and follow any of these trades, please make sure you have done your own risk assessments. You have done correct position sizing, all right, and allocate the right amounts for the investments before doing so on your own accounts. Okay, so like I've said earlier, all right, every stock that I sell on, I've prepared the cash to pick up all and every single one of these shares. Okay, now, so let's get to the portfolio. We have a portfolio open right now of 6 stocks, right? 6 stocks with, 7 with JD, and 1 portfolio hedge with the VIX index over here. All right, so that's what we have over here. And I am actually using up to 95% of my portfolio, everyone. All right, this is a $100,000 portfolio. Yes, it's a $100,000 investment portfolio. All right, and I'm using up to 95,000 even on market tops. All right, so many people remain fearful, putting all cash in, all right, in market tops like what we have right now. Okay, but markets can stay stubborn, right, for much longer than we think. So the key idea is to identify sectors that will benefit even if the market collapse, right? And then continue to pick on severely undervalued stocks. That's always something that will work. All right, now, so let's get going. Now, let's first look at the markets, all right, and what we have, and then we go into the portfolio, okay? Now, so markets. So let's go. Oops, not SPX, but SPX. All right, now, so we have SPX over here that has bounced off yesterday and today, all right, and it seems like it's moving on the breakout. But the problem is this. The problem that I have with the SPX is really this. If we go to the SPY instead, all right, so what's happening to the SPY right now is I'm just going to go to my charts. Okay, I'm just going to add back the volumes. Okay, so under the price. Oh, man. Oh, here, yes, equities. All right, show volume subgraph. So can everybody tell me what do you see, all right, with regards to the volume that's happening on the SPY? So yes, it's been going up over here, all right, but what's happening to the volume? All right, leave a comment if you see what's happening over here, everyone. Oh, thank you very much. Thank you very much for those of you who have actually clicked the like button and actually shared the live video out as well. All right, I appreciate that. All right, I actually didn't mention it, but you have done so, yeah? All right, now, thank you, Melinda. All right, that's a good spot. All right, well done. All right, no, mailing, not so much a divergence, all right, but low volume. All right, now, so what's happening is, all right, if a buying happening, all right, in the market is strong, all right, what it should be supported by is what we call volume. Right, and the problem right now is with the markets pushing higher, we have volume that's declining. So it is like you trying to push a rock, right, that is already very high up in the mountain. So when you're very high up in the mountain, how does it look like? The slopes are getting steeper and steeper and steeper. Would you agree? Now, but if the strength that you have, right, is starting to get lower and lower, that means you're getting tired. Right? What does it tell you? Where does the risk lie? Right, now, I hope you get that simple common sense idea of understanding that. Okay, and not only has this kicked in, right, with the volume itself, it has also been happening, right, to the total traded volume of the SPY options. Right, SPY options have been trading in very, very light volumes over here. Right now, so some of you ask me, Terence, how do you tell this? Right, you can tell this by going through to the trade tab and under the options chains. Right, you can see the total number of calls and puts traded, right, when you reach the end of the day. All right, markets are open right now, so it shows you the current change in volume. Right, but when you come and have a look at the end of the day, right, you will see the total number traded for the day. Right, and you can start to see that the options trading volume is also going down. Now, what does all this mean actually? Right, all this simply means that no one is interested in this market. Right, yes, there is no one trading in this market. All that's happening right now is the algorithms, right? The computer systems, they are firing orders in and out, trying to stop the markets, right? And that's what's happening right now, right? The funds are not trading, nobody's trading, right? And nobody's moving anything, right? It's just nobody's moving anything, right? The wholesale in May effect over here, all right? The summer holidays, yes, people can't go anywhere, but in America apparently they can, all right? It's still light volume. All right, it's getting lighter and lighter and lighter, all right, as we hit the peaks over here. Now, so what's the concern over the last week? The concern over the last week is really this. Something that has been very, very rare, okay, and that's the bond breakout. All right, the bond has continued to break out over here and it's continued to remain strong. Yeah, all right, remain strong right now. And that's causing, all right, that pressure on the markets that we see. Yeah, okay, so that's causing the market pressure that we're seeing right now. Okay, but of course, we see a pullback on the bonds today. Yeah, okay, but that has happened often enough. Okay, but it always continues to climb after that. Yeah, okay. Now, and the difference that you see over here is with this climb, all right, you can actually see that volume is picking up. Yeah, okay, so this obviously looks different, right, than the SPY chart that we see earlier. All right, sorry, Melinda, I put you in the spotlight long enough. Let me take you off. Apologies for that. Okay, now, so let's get to this. So the downside risk remains very evident, all right, and more so now, all right, when, we have a breakout, everybody might be thinking that, hey, this is the time I might want to chase because we have the breakout, right? But very quickly, because there's a thin pocket of air, all right, it can reverse on us very, very swiftly. Okay, very, very swiftly. Yeah, all right. So be aware of that when you take on trades. Now, having said that, I would love to start perhaps taking off some positions that I have on my portfolio. All right, so let's see if I can take anything off today. Now, the first trade that I have on my portfolio is VZ. All right, so we have VZ open over here for the 17th September 57.50 puts. We sold it for 243. Now, let's see what it's worth today. All right, so 17th September, right, 57.50. Right now, it doesn't seem like much. That's perhaps because VZ has started coming down. Right now, so why are all these stocks coming down when the market has been kind of moving up, right? Okay, I'll explain to all of you before I end the session. If I forget, please remind me, okay? All right, this is a learning point and, kind of like one of those golden nuggets that I want to throw out, okay? And since I've already said I will do so, all right, if I do forget, please remind me, all right? Now, so Verizon, we can't take our profits. Let's go to the next stock. Okay, now next stock over here is Tupperware. All right, so Tupperware, I have a 20th of August, 20 puts for 109. So let's go. What's Tupperware done? Tupperware has a nice bounce. See everyone? All right, this definitely we should be able to take our profits. Okay, now, so we got into this stock. Why? Because it's severely severely oversold. Okay, and the prices have been depressed for a really long time. Okay, and if all of you remember, okay, I clearly say it's a profitable company trading at below 10 PE, right? That's severely undervalued. That's been selling too hard, right, for a profiting stock. Yeah, okay, a profiting stock. Now you can see over here, right, we have profits that are slowly increasing, 41 cents per quarter, 85 cents per quarter, and then right now we have 95 cents per quarter. Yeah, okay, all right, so it's improving, all right, and this time they finally decided to bounce the stock. Right now, so we're going to take our profits off the table. That's for sure. All right, so let's go to it. 20th of August, 20 puts. Oh, it's cost us 15 cents to close this today. All right, so I can probably pay about, let's see. Oh, it's almost 90% of the profits. So it makes absolute sense to take this off the table. Now, why do I say it makes absolute sense to take this off the table? Now, if all of you remember, I think I did this before. Okay, all right, now I did this before. Okay, but I'll just quickly do this again. All right, so let me first place an order. All right, I want to close this position today. All right, let's see if the markets will bite at 13 cents. All right, I've sent my order in. Okay, I'm just trying to test. Okay, now, and I say the reason test because, right, I'm not sure if the options are traded in 5-cent intervals. And it seems like so because my order has been submitted, but it doesn't appear. Right, so it'll probably state that this option bid and ask prices move in 5-cent intervals. Yeah, okay, right now. So I'm going to amend it to 15 cents and it's going to get taken. Taken? Yes. Weird ass. I submitted it for 15 cents and look what happened. All right, as much as they trade in 5-cent intervals. But let me show you what happened. They closed it for 12 cents. Hence, the last traded price was 12. Right now, so this is something brokers does over here. All right, so at 44 minutes, all right, which is the clock on the platform, all right, I've just bought back 3 of these options at 12 cents over here. Okay, now this is the trade that I've just filled. Okay, now, so why do brokers do this? Think of it like, a positive in terms of service, right? Because you try to pay 15 cents to close the trade, but they did it for you for less. All right, they asked you to pay only 12. Would you be a happy customer? And the answer is yes. All right, so that's where it's kind of like the broker trying to tell you, hey, I did better for you. You should be happy. All right, remember what I did. Okay, all right, now, so that's something that they do. All right, and we obviously closed the trade right now, so let's note it down, shall we? Now, we opened this trade on 2nd July, so it's about 1 month ago, right? And we closed it today for a 12-cent profit, right? Now, so that's gonna take off $6,000, all right, from my current exposure, all right, and we closed the trade for 12 cents. That's a cash flow creator of $291 on this trade, right? And also another winner on our portfolio. Okay. I forgot if I was going to do something else, okay? But if I was, all right, please remind me, all right? Now, let's go to the next one over here, Manchester United. All right, that was a royalty trading stock that I mentioned over here. All right, so let's get to it. We have a 17 September 15 put for 50 cents. All right, 17 September 50 puts for 50 cents. Let's go. All right, Manchester United. MANU. Yeah, it's a nice up bounce as well. All right, now, so we're going to close this perhaps. All right, so let's close this. 17 September. Voila. All right, 15 puts. It's worth only 15 cents today. All right, so we're probably going to do the same, 15 cents. Voila, voila, voila. We sold it for 50 cents. All right, let me tell you what I'm going to do over here. All right, I'm going to do something. All right, hang on. Let me close this up first. All right, so since the broker has done something better for me, all right, I'm going to try my luck again. All right, I'm happy to pay 15, but if they fill me for less, all right, I'll take it as well. Oh, man. Not Manchester United. They didn't do it. They didn't do it for me. They didn't feel for better. So I've got to try it on my own. All right, let's see. Oh, man, the price jumped. The price jumped. All right, but anyhow, I got filled on 2 of the orders. All right, let's see if I can get filled on the last one. Oops, hang on. All right, I got filled on 2 of the orders for 15 cents. All right, the Manchester United put option. All right, we bought 2 for 15 cents. I still have 1 more, right, that's working right now, okay? 1 more contract that's working right now. Okay, we'll fill this up before the end of the session. Let's go to the next one. I've closed 2 trades. All right, I'll fill this later. All right, we got 2 done at 15 cents. WBA, all right, 45 puts, all right. 17 September 45 puts, we collected 152 for this. All right, so what has WBA done? All right, it's moved up a little bit. All right, so let's see, 45 puts for 17 September. 45 puts. It's worth about 85, 86 cents today. All right, 85, 86 cents. Let's go. All right, we have collected about half the premiums. Okay, half the premiums. Now, so this was a trade that we entered on 16th of July, all right, all the way to September. All right, so let's work it out. 16th of July, if I'm not wrong, it was 17 September. How many weeks left there is? All right, 1, 2, 3, 4, 5, 6. All right, 7, 8, 9. 9. It was a 9-week trade. Okay, 9-week trade. Now let's do our math and let's see if it makes sense for us to close it. Okay. All right. Now, so by collecting a premium of $1.52, okay, I was intending to make, all right, about this doesn't work out. Let's see if it works out here. All right, equals to 1.52 divided by 9. Okay, now we were looking to make about 17 cents for every week. All right, I hope you get what I mean, because we're collecting 152 for a 9 weeks option. All right, so every week, all right, we're looking to make about 16 cents. All right, but today, if I close this trade, all right, I'm gonna make, all right, 152 minus, let's say we close it for 85 cents. Okay, all right, now, and then we'll divide it out by 3 weeks, right? Because there's 6 weeks left, right? So we divide it out by 3 weeks. All right, now, so, for the last 3 weeks, all right, we would have made slightly better returns at about 22 cents, right, per week, right? 22 cents per week. Now, what does this mean then? What this means is, right, if I close this trade today, or if I decide not to close this trade, there is 86 cents left, right, for the remaining 6 weeks. So I stand to make only about 14 cents per week if I continue holding on this trade. Okay, but 17 and 14 cents, right? The difference isn't drastic. So here's what I'm going to do. I'm going to continue holding on to this trade. All right, okay, it's not like a drastic difference. I still have a lot of profits on the table. All right, still good money, so I'm staying in. All right, I'm staying in. Okay, now, so I'm leaving the position on WBA. All right, no touch on it. All right, now let's go to TSN. All right, so TSN, we have a 17 September 67.50 puts for 130. All right. Ooh. All right, let's go. Tyson Foods. All right, 17 September. What do we have? 67.50 puts. Okay, now it's worth about perhaps 120, 123 today. All right, let's see. All right, we collected 130 for it, so no profits to show. So we're just gonna hang on as well. All right, now our last open trade, GIS, right, which we did on 30th of July. That's last week, right? Yeah, that's last week. I think it went down, but I'm not, like in particular any hurry to close this trade, so I'm fine with it. Yep, it went down. All right, but it's fine. All right, no worries. Like I said, I'm more than happy to hold on to the positions. All right, and this is a good reversal that we're seeing over here. All right, so all bodes well. I believe we have a 60 puts, right? So it's worth about 245 right now. How much did we sell it for? We sold it for 180. So I'm slightly under right now. Okay, now, so we are closing one position. Oh yes, all done. Okay, my Manchester United is all wrapped up. All right, so all 3 contracts closed at 15 cents. All right, so we can key in right now, and we made 105 cents over. $105. And another profitable trade. We closed this today on the 6th of August. Okay, and that elevates off another $4,500. So I'm down now to $84,500. Right, that's another $105 in cash flow into our portfolio. All right, let's go. There we go. All right, now, so here's what I'm going to do. The reason why I'm closing the Manchester United trade, it's I still think it's severely undervalued, right? And I'm actually going in for round 2. Right? I'm actually considering going in for round 2. So here's what I'm going to do. All right, I'm going to move to the December expiry. All right, I'm more than happy to go a bit longer. All right, I'm going to sell let's see if it's worth our while, okay? We can get about 50 cents today for 15 puts, okay? And this will be 133 days expiry. Now, let's work our math, right? If we do this trade, right? Just doing it first, right? December and 15 puts. If we collect 50 cents, right? That was it. All right, now how much would we have? So it's 133 days divided by 7. That's 19 weeks. So we collect 50 cents divided by 19 weeks, right? And that's a 2.63% trade, right? Now, so if we multiply it out, hey, what's happening? Oh, this. Oh, man, I did my formulas wrong. Yes, I should have done this. Equal to, all right, 50 cents divided by 19 weeks. Right now, so this trade would still pay me 19.55%. right, for a 19-week straight, all right, on an annualized rate. So can you see it still fulfills our goal? It still fulfills our target, which is 20% per annum, right, on the trades that we take. All right, so this is still a good trade actually, right? And if Manchester United continues to move up, right, as the BPL season starts to open and crowds are allowed back, the profitability of the club itself will start to improve, right? That should push the stock price higher. Okay, now, so if that happens, we can actually close our trade earlier and it's going to bump up this return. So that's what I'm looking at over here. So let's go ahead and fire this trade. All right, now, so 15 puts for 55 cents, December expiry. All right, so I'm going to place that order and let's see if we can get what we want. So I'm going to take the same 3 contract trade. So I'm just merely replacing the same one that I've closed for a different expiry. All right, December, 15 puts. All right, so I'm in on 50 cents. I'm not filled yet, okay, but I'm in on 50 cents over here. Okay, all right, now, so my order is here. I'm waiting to get bitten on it, which means for them to fill my order. All right, but let's see, okay? All right, now, so I do want to add another stock into my portfolio, right? But I do have to highlight very, very closely, right, on, the current risk that's actually on the stock, okay? Now, and it is this, Cardinal Health, right? Now, it's plunged on earnings. Right, I have no idea why. Okay, it's plunged on earnings. Okay, but I'm going to take advantage of this. Yeah. All right. Now, so earnings wasn't as well as expected. Yeah. Okay, so they were expecting 118, right, and the company only turned out 77 cents. Okay, now so that has caused the stock to plunge from 59 all the way down to 50, and that's pretty drastic. That's like a 20% drop. Of course, we see some recovery today. Right, about 1%. Right, but there's still a lot of recovery. Now, the threat is this. The threat is, right, it has just fallen, which means, right, every single indicator is going to look ugly. Right, every indicator is going to be like steeply pointing down. Right, we can do this. Right, I can guarantee you it's going to look bad. RSI. Right, there we go. All right. Oh, it's bounded up today. All right. Now, so yesterday, all right, it would have been steeply down. Yeah. Okay. It went from like 60 all the way to oversold. All right. Below 25. Right. And today with the bounce, all right, we see it curling back up. So, all right, if I were a little bit more patient, or if we were running these sessions on Tuesday, all right, it might have been a better entry to see if the stock stabilizes. Okay. But since I'm running this on Friday, all right, I'm just going to ignore the timeline. All right. I'm just going to take a position today. Yeah, okay. All right, so I may be early. You can choose to wait if you actually want to do this trade, okay, for a couple more days for the price to settle. Okay, but I'm happy with this. I'm more than happy to own the stock if anything happens, right? So I'm getting in. Okay, so I'm going to take a September expiry, right, 50 puts, right? And I'm going to aim for, let's try 112. Yeah, okay, let's see if they take me. So 17 September. All right, so I'm gonna go. Whoa, I can get one. I wanted to say 115, but the market maker must have heard me. All right, I sent my order off at 112, but it seems like they don't want to bite and they don't even want to appear. So it looks like it's trying to force my hand over here. All right, it's trying to force my hand. So here's what I'm going to do. I'm going to just bite it. Yeah, okay. Now, all of you can afford to be more patient, yeah? All right, but I'm just going to bite it. Now, so they filled me over here at, different prices. Right, so they filled me at 111.7. What the heck is that? I don't know. 111.667. Okay, now so they probably filled some at 111 and some at 112. That's why you see the decimals. Okay, but I'm just going to record this as 112. Okay, all right. So we got filled on 3 contracts for at 112 premiums. All right, now let's go. Right, so this is not filled yet, so I can't put a number to it, but let's put Cardinal Health that is filled. All right, now, so Cardinal Health will be trade 63 on our portfolio, and it's the new one for the new year. All right, so I'm just going to mark this down, okay? All right, so let me do the breaks as well. All right, so we have July. All right, and then we have August. August is today. That's nice. Right, and let me also mark it as year 2. Yeah. All right, now, so trade number 63 on Cardinal Health. All right, portfolio puts for 17 September. Okay, 50 strike put option. We collected 112. Oh, no, that's today's date, 6th of August. All right, 1.12. Right, so it's going to give me a net cash collection of $336 for 3 contracts. Now, what's the deposit requirement for this trade? All right, it will be 300 shares of Cardinal Health at $50 a share. So I need to set aside $15,000 to do this trade. Yeah, okay. Now, in anything that happens, all right, I can buy all 300 shares because I've allocated it. Now, so it seems like by closing those 2 positions, all right, I'm going back to almost full. Yeah, all right, almost full allocation over here. Okay, all right, now, so that's what we have, and that's what it shall be. Okay, and let's take a look. Oh, let's calculate the ROI. Now, so this ROI is going to be 112 divided by $50. So that's 2.24% return. Okay, but this trade is only 1, 2, 3, 4, 5, 6 weeks. So let's divide it out by 6 weeks and then annualize it. So it's a 19.41% return trade. Not too bad after all. Yeah, okay, not too bad. So I'm going to take it off anyway. Now, so yep, that's it. All right, so that's the stocks that I want to put into the portfolio. And that's what we have. Okay, now, so in the meantime, okay, I don't just want to look at all the goods, all right, but let's look at the bad. Now, and I say the bad because JD, right? JD is a China company, all right? And what has happened to all China companies, right? It's taken a dip, it's taken a fall. Okay, but JD, if you realize, have held pretty strong, right? It's not the first time it's hit this level, right? Which is 66.70, right? It's done this earlier in May, right? When we actually took a position. Right, and then after that, it came back because of the China collapse, right? And now it's rebounding again, right? It's sitting at 70. Okay, now we're not too far away. Okay, we have a 77.50, right? For this stock, we're not too far away. Yeah, okay, we are where the black line is, somewhere here, all right? And we have all the way until January 2022, right? January 2022, right? But having said that, we did actually have a good exit on Baidu over here, right? All of you remember Baidu? Right, so we had a 17 December expiry, but instead of holding on to the trade, we actually took the profit, right, after we entered the trade on 11 June, right, and we got out on 25th of June, right, because that gave us a good profit within a very short period of time. Yeah, okay. Now, so for JD, we didn't, right, so I'm still happy to sit on it, right, and, you know, if anything happens, I can always pick up the stock. All right, now, so that's the portfolio, right, that's what I'll be doing for this week. Right, any questions? Right, if you have any questions, because I see many of you are just listening very quietly on the background, right? But if you do have questions, you can start posting them in the comments, all right, with regards to what I've done today or what I've talked about. And yes, all right, I just remembered. Okay, I just remembered. Okay, I did say, I promised that I wanted to share a golden nugget with you, and it's this, right? Did all of you realize the stocks which I'm opening position on? Apart from apart from Manchester United right now. Okay, so a clause for sharing the golden nugget will be if anybody can spot, okay, what's the commonness, okay, or what things are in common between all the stocks that I have currently in my portfolio. All right, Facebook user, do you want to show yourself? Okay, if you show yourself over here, I'll be more than happy to remind you, okay, which I did at the start of the session, what's the size of this portfolio. All right. Okay. You just need to hit down on the facebook.com/StreamYard. Okay. And you see a Facebook button to approve the use. Okay. All right. But before you do that, okay, I hope you do that soon. Okay. This portfolio is built on $100,000. Okay. But although we have a $100,000 portfolio, after year one, this portfolio is already up to 117,000. Yeah. Okay. Because we made about $17,000 profits in our first year. Right, so the portfolio has grown from 100,000 to 117,000. Yeah, okay. All right. Jasper, John, I'll answer your question in a bit. Okay, I just don't want to forget about. Thank you for answering the question, John. Thank you very much for that. So Donkel says, right, tech stocks are down due to non-farm payroll. Is this temporary? Just imagine this. All right, now, is it already very expensive? A lot of these tech stocks. Are they already very expensive? And if your answer is yes, right, do you think it's temporary? Nobody can tell, right? Because if the market rebounds, then it's temporary. But if it's not, then how so? Can you see now? Yeah, okay. All right, now, and there's another reason why tech stocks is down today. It is not just because of the non-farm payroll, right? Does anybody want to know? If you want to know, type yes in the chat, yes in the comments, and I'll share it with you. Okay, now, but I want to go to my golden nugget first, and Ivy's got it. All right, Ivy, congratulations, and she's right. Okay, a lot of these stocks are defensive sectors. Why? VZ, Verizon Wireless, telecommunications, correct? Right now, WBA, right? What are they? Pharmacy chain stores, right? Cardinal Health today, pharmacy chain stores. Tyson Food, right? What do? They sell food, right? GIS, what do they sell? General Mills, right? Conflicts and stuff like that, right? Food again. Do you realize they're all defensive stock? Now, why am I putting money on these positions? Simple. Because if the markets do come down, right, and when the markets does come down, right, where are the funds going to move from? Okay, because when the markets come down, right, they are going to take money out of the high-flying stocks. So what are the stocks that have been high-flying? The IT sector, right, or your hyper-growth stocks. Agree? Now, so money is going to come out of that, right? And the funds will have to get out in case it gets too risky, right? So temporarily, right, until they feel stability, right, they're going to take money out first. But the problem with funds is they cannot keep it in cash. So they will have to find another stock to park this money. So where are they going to put all these stocks then? Right? They just got out of tech. So it can't be they find other tech stocks to put it back on. Doesn't make sense, right? Right? So they will park their money temporarily in these defensive stocks. That's why you actually see that when markets are collapsing, all right, especially on the onset, it is always the defensive stocks that benefit from it, right? And this is not the first time, right? For those of you who have been joining me in these sessions, we did this one round before. Yeah, okay, so this is not the first time, I'm just redoing it. Okay, so that's why I'm happy to take positions on defensive stocks. And even if some of them are going against me right now, right, I'm perfectly comfortable with them. Why? Number one, many of them are still trading at very low PE valuations, like what we did with Tupperware. And they're all staple, like staple industries, right? They're profitable, all right? And they are cheap in a certain way compared to the markets, right? So in fundamental angle, there's no issues with them, right? And, if the market collapse, I still have the benefit of these prices shooting up. Yeah? Okay, so you see where I'm going at right now? Okay, now I hope you understand this, okay? Now, so I see many of you are typing yes. So as agreed, okay, I'm going to show you why tech stocks are down today. Actually, I already said this, okay? All right, Facebook users, selling puts locks up a lot of capital. And yes, you're right. Okay, why? Because we are doing it the right way, which means, right, at the start of the session, I also said this, we are doing portfolio puts. Because number one, this is an all public session, right? Which means I'm trying to showcase, I'm trying to educate, right, anyone who has not done option selling, right, how it can benefit you, right, if you're willing to explore building a portfolio from an investment angle, right, selling options. Yeah, okay, so it's the simplest of the simplest strategy. Okay, of course, we have our mentorship programs where we talk about different options approach, right, and different styles of how you can generate profits with the different strategies. Okay, but you leave that to the next level. Okay, but over here, every single week, right, as much as possible for the last 1 year, right, I've been building this portfolio, right, and yes, although with the intensive cash outlay, right, but we're still generating a 16% return, right, and skipping some weeks, which means we effectively trade once a week, right? So if we can make like 16-17% return trading just once a week, and sometimes just one stock, okay, I think it's pretty stellar. Yeah, okay. All right, it's pretty standard for the amount of work that we're doing. All right, now, so back to the next part over here. All right, now, the real reason why technology stocks are falling is because of bonds. Why? Because today, where are the bond prices going? Bond prices are going down. So if bond prices are going down, it means interest rates are going up. Simple. So when interest rates are going up, right, tech stocks fall. Tech stocks hate interest rate rises. So as interest rate goes up, technology sector always goes down. Okay, and the financial stocks will benefit because they stand to make more profits. Okay, and then when the interest rate goes down, it's always the flip side. Yeah. Okay. Right now. So today's fall has to do with the interest rates. Right now, will it fall further? Right. It all depends, because if the bonds continue falling, the technology sector will continue dipping. Right. Okay. Now, so that's one of the things where we always say a correlation to a certain extent. Yeah, a correlation to a certain extent. Yeah. Okay. Right now, my Manchester United order is still not done. Right. So I will not fill it as yet. Okay, I'll just update it next week if it opens up. Okay. All right. For now, it's not done yet. Okay. Now, so I hope the explanation was clear enough for you why the tech stocks are falling today. Right. It has to do with the interest rates. Right. And that's one of the reasons why. Okay. Now that's it. Right. That's what I have for today's portfolio. And thank you very much for joining me once again. All right. For another week of portfolio building live over Facebook on Friday. Right. And I'll see all of you next week once again. Right. On Friday. All right, everyone. Now, thank you very much. Have a good weekend ahead. And for those of you joining me from Singapore, right, it's a long weekend. All right, long weekend. All right, enjoy your long weekend and stay safe. Yeah. All right. Goodbye, everyone. And I hope you enjoyed the session. If you have not helped me do this, please click the like buttons. Please click the share buttons so we can, with your help over here, we can reach out to more people and help them build their portfolios for better returns. Okay. Now, thank you very much. I'll see all of you next week. Bye-bye.